Welcome to the Washington, D.C. MarketWatch, brought to you by Real Estate Business Intelligence and MRIS Company. Let's take a look at the most recent market activity in the nation's capital. In February, the signs in the U.S. economy were a mix of positive and uncertain. There were 236,000 jobs added in February, better than forecasters had predicted. The unemployment rate fell to 7.7%, and the drop was due mostly to people finding work as opposed to dropping out of the labor force. Home prices across the country continue to rise, and the inventory of homes for sale is at its lowest level in 13 years. Demand remains robust, and the outlook for the housing market is strong nationally. Despite these positive economic signs, the mandatory federal spending cuts of sequestration and the congressional battle over the budget continue to fan the flames of uncertainty. By the end of March, Congress and the President must approve federal spending levels for the remainder of the fiscal year. It's unclear how the sequestration cuts will be incorporated in the final budget numbers, but the D.C., Virginia, and Maryland economies could be disproportionately affected. There were 481 sales in the Washington, D.C. housing market in February, 16% higher than this time last year and the highest February total in 6 years. New pending contracts were relatively stable. There were 608 new pending contracts in February, up 2% from last year. This sales growth provides evidence of continued demand in this market. The inventory of active listings continues to decline in the district. There were 983 active listings at the end of February, 600 lower than this time last year. New listings are also down, falling 2% from this time last year to just 696. At $432,500, the median sales price for D.C. is up 8.5% from February 2012, an increase of $34,000. The low supply of active listings is not only putting upward pressure on the median sale price, but also influencing the time on market. At 23 days, the median days on market is down 20 days from this time last year. As we enter the spring market, economic uncertainty continues to linger, particularly in this city due to federal employment presence. Despite these unknowns, the pent-up demand in the market will likely lead to stable growth in the coming months relative to last year due to the very low inventory of homes for sale. That's the Washington, D.C. Market Watch for this month. Check back next month for the latest.